Hello, this is Jackson Jordan, and I'm here with Elevate, and I'm the president of the company, and I'm going to let the rest of everyone introduce themselves.
Hi, I'm McKenna Angeny, and I'm the VP of Marketing.
My name is Faith Cole. I am the VP of Business Analytics.
Hi, I'm Isabella Graham, and I'm the VP of Finance and Accounting.
Hello, my name is Ian Padula. I am VP of Sales Management. Elevate Bikes is a performance-based bicycle company targeting three key segments, which are speed, recreation, and mountain. Our company is mainly built around product quality, target targeted marketing, and long-term growth. In the early quarters, we focus on establishing our products, opening stores, and building demand. By quarter three, the company had increased total industry exposure in a market that grew from 3,200 units in quarter two to 5,000 units in quarter three, which is about a 58% growth in the market. During that same period, Elevate Bikes increased unit sales from 574 to 794, which is about 38% growth, and revenue even increased from 758,000 to 1.1 million, which is a 38.5% increase. We also ended quarter three with $1.3 million in cash and $2.2 million in total assets, which gave us a strong financial base for future expansion. Our long-term strategy is to continue increasing market share, improve efficiency, and scale profitably. To support that growth, we are seeking $2.5 million in venture capital funding to invest in marketing, product development, and operations. That funding would bring our total capitalization to $5 million. Our mission statement and our objectives. This slide covers who we are as a company, what industry we are in, and who is leading the business. Elevate Bikes, like I said, is a performance-focused bicycle company that designs, produces, and sells bikes for active and lifestyle-driven consumers. We compete across recreation, mountain, and speed categories, and we've made it clear in our strategy that speed is our number one target, followed by recreation and then mountain. From a team's perspective, our management group is balanced across leadership, marketing, finance, sales, and analytics. I serve as VP of Sales Management and help to lead overall strategy. This kind of balanced team is important because Chapter 9 says investors care a lot about having a well-rounded management team, not just a good product idea. Our mission is to deliver high-quality, performance-driven bicycles that provide value, reliability, and long-term satisfaction. Our vision is to become a leading bicycle brand by using innovation, strong positioning, and scalable growth strategies. That mission and vision guide every decision that we make.
All right, next we're going to hop into our market demand and share. So between quarter two and quarter three, we see a really strong growth. Total demand surged about 38% quarter over quarter, jumping from 574 to 794 units, like Ian said. This means that we are a segment leader in the speed segment. This is our primary engine, capturing a 22.84% market share with 412 units sold in quarter three. This really gives us momentum to push our recreation bikes as well. Units sold in the recreation category increased by over 60%, reaching 285 units. Our market position currently in quarter two, we are holding the position of 15.6% of the total market share, maintaining a solid top four industry ranking, but we would really like to raise in the industry anyway. This has lots of opportunities for growth with our mountain bike sales. They remain flat at 97 units, and this really identifies a key area for a targeted marketing in quarter four. We'd love to make a strategic pivot, and we have high performance in the speed segment, and this suggests that we are well aligned in the highest volume market trends. And next, we're going to hop into market opportunities. The opportunity for Elevate Bikes is very strong because the bicycle industry is growing and demand has spread across multiple segments. In quarter three, our total industry demand reached about 5,000 units, with about 2,000 of those units in recreation, about 1,300 in mountain, and 1,800 in speed. This tells us that our biggest opportunities are in the recreation and speed segments, which is why we've emphasized those in our strategy. This market is also growing for the reasons listed on the slide. More people are focused on health and fitness. Outdoor recreation is becoming much more popular, and there's way more demand for sustainable transportation options. This makes this a structurally attractive market for us, and this is something that Chapter 9 says investors want to see before they commit capital. For Elevate Bikes specifically, this market gives us room to compete by offering carbon fiber quality and product-specific features at prices that are still competitive. We're not trying to be the cheapest brand. Instead, we're trying to give customers better value through product performance, design, and reliability.
And next, we're going to move on to our product strategy. And this is built around having the right products for each segment instead of trying to force one bike into every market. We have four main products. Elevate Ascent is our speed bike and our strongest performer. Elevate Basic serves the recreation segment. Trailbreaker targets mountain riders. Beach Cruiser gives us coverage in the comfort and entry-level side of recreation. The reason this matters is because each segment is looking for different benefits. Speed customers care about performance, efficiency, and advanced features. Recreation customers care more about comfort and versatility. Mountain customers want durability and off-road performance. Our products reflect those differences. We also leaned into a smart follower strategy, and this means we studied what worked in the market and then improved on it with better feature choices and positioning. For example, our product updates like Elevate Basic 2 and Trailbreaker 2X were made to better align with customer expectations in those segments. And over time, this helped us build a clear brand identity and better match to what customers actually wanted. And then next, we're going to move on to our marketing strategy. This combines traditional media, digital marketing, and targeted messaging by segment. We used magazines, web pages, SEO, and social media to build visibility and demand. By quarter 4, the company was spending about $228,000 on major media advertising, $4,000 on search engine marketing, and $16,000 on social media. And this really shows how serious we were about growth. What made our promotion strategy effective is that the messaging changed depending on customers. For speed, we emphasize performance and race style benefits. For recreation, we emphasize comfort and everyday usability. For mountain, we emphasize durability and adventure. This matched what customers want in those segments and the segments they actually cared about. The results support that strategy. In quarter 3, sales grew to 794 units, and the company's marketing effectiveness score was around 0.730, which shows our promotional spending was working. Marketing was not just a cost for us, but it was one of the main reasons demand kept increasing.
All right, so moving on down to sales and expansion. One of the biggest reasons why we were able to grow was our strategy for expansion. So we opened up stores in Amsterdam and then Bangalore and then New York City. This gave us physical presence in 3 key markets of the world and made the brand more accessible to customers. So by quarter 4, the tactical plan was pointed towards expansion into Rio de Janeiro, which would add another growth market to the business. And at the same time, we expanded our sales force from 6 employees in quarter 2 to 11 employees in quarter 3, and then eventually to 18 in quarter 4, which directly increased our ability to generate demand. In that tactical plan, the projected demand went from 574 units in quarter 2 to 794 units in quarter 3, and then 1,300 in quarter 4, with a projection of 1,700 in quarter 5 and 2,200 units in quarter 6. So this growth tells us that the sales expansion was not random. It was directly tied to the location, more salespeople, and stronger marketing strategies. This is a very good example of our team making coordinated decisions across sales, operations, and marketing instead of working in separate silos.
So now we're going to go over to the financial performance of our company from quarter 1 to quarter 3. So from quarter 1 to quarter 3, Elevate Bikes showed strong revenue growth while still building the company. In quarter 1, our revenue was obviously 0 because this was our launch period. In quarter 2, our revenue rose to $758,000, and in quarter three, it increased again to $1,051,000. Our gross profit reached $469,000 in quarter two and $710,000 in quarter three. And this shows that our company was generating real value as our sales increased. So our net income was negative $225,000 in quarter one, positive $50,000 in quarter two, and negative $58,000 in quarter three. So it's important for us to explain that loss in quarter three correctly. So it wasn't caused by weak sales. It came from investing heavily in stores, marketing, and operations in order to grow faster. So that's why we still finished quarter three with $1,366,000 in cash and no conventional bank loan or emergency loan. This means that we stayed financially stable while scaling our business up. This is exactly the kind of thing that Chapter 9 talks about. Investors wanting to know both what the company wants and what's in it for them. And with that means being honest about our short-term investment phases while showing our clear long-term earning power as well.
All right, next we're going to hop into some key strengths and weaknesses. When we look at our performance, honestly, there are very clear strengths and weaknesses in the company. Our strengths were our strong financial performance, our good employee productivity, and a strong market position. On the balanced scorecard, you can see that our financial performance was about 19.5, and our wealth score stayed just under 1 at 0.907. Our financial risk score was exactly 1, and this means we stayed low risk while creating value. At the same time, there were weaknesses that we have to consider. Our manufacturing productivity was about 0.578 cumulative, and our asset management was around 0.428. This means that we were not using our resources as efficiently as the very top competitors. This matters a lot to us because if demand keeps rising faster than efficiency improves, then the margins can get squeezed. So this slide is really about showing that we understand both sides of our business. We had strong traction and growth, but we also knew exactly what needed to be improved. That's why our future strategy focused so heavily on product efficiency, quality improvements, and better use of our capacity.
So moving into our business strategy, our overall strategy is to build a long-term growth but using controlled risk. And with the simulation, we first started with recreation being our number one targeted product. And then after the first couple of rounds, soon realized that speed was our best-selling product. So we then changed to rank speed at the first priority, recreation at second, and mountain at third. And that was intentional because speed gave us the best chance to compete through product performance and people that are willing to spend more money, while recreation gives you the opportunity to have steady sales volume. The core strategy and differentiation with value pricing, we are not like a low-cost leader. Instead, we try to compete by giving customers better products, a good, strong design, and better alignment with their needs, and also making changes to the product to fit better to the customer's needs. Um, That strategy also fits with our mission of delivering cost-effective, reliable, and eco-friendly bicycles. And at the corporate level, our goals were market penetration, so expanding to all those different locations geographically with and then new product development and seeing the financial growth quarter by quarter. We pursued market penetration through new cities and adding more salespeople quarter to quarter, and then getting the ability to update our products with things like R&D and using a disciplined or expansion plan. That consistency is more important because that's what investors want to see is that we're using tactics to support our decisions rather than just, making random choices and seeing if they work out for us or not. So moving into the tactical plan, in quarters 4 through 6, our plan was trying to scale the business more and take over more of the market share. And the first part of that plan is just in general more growth. So we're trying to get more demand, more sales coverage, and a bigger geographic reach. The second part is efficiency. So like improving the operating capacity so that we can keep up with the growth and not lose sales because we're not able to produce to meet the demand. It says on the tactical side, the company is projected 1,350 units of demand in quarter four, and then increasing even more to 1,700 in quarter five and 2,200 in quarter six. And the revenue projection for quarter four is $1.3 million, and then increasing to again to $2.2 million in quarter five, and just shy of 3 million in quarter six. And those numbers are coming from us expanding our sales force, adding more salespeople in each store, um, using putting a lot more money into advertising with the SEO marketing and trying to update our product line to better match what the consumers want. And we also plan system improvements like cross-training workers, building planning skills, improving operator control, supplier quantity. And because when you work on the things internally of the company, it reflects on the outside. Um, and so this is just showing our future growth as we try to bring you in on this opportunity as well. We're gonna move forward here. Here you can see just our projections alone for in revenue moving forward with upwards of, another like 2,000 units for each quarter. And then this is where we're seeking money from you. So in totality, we're looking to get $2.5 million in venture capital funding, which would raise our total common stock delivered from 2.5 to 5 million. The capital is used to support growth in our three big expansion areas with the marketing, the product development, and the operations. On the marketing side, we're trying to continue big advertising, putting more adverts out into all different um, spaces. And we're also looking to put more than almost $2 million into research and development on our products to make the quality better and better align them for the customers, trying to advance features and get product improvement for the new lines that we also look to implement in the future. On the operations side, we're supporting more expansion, adding the more sales coverage, and making sure that we have the internal capacity to meet demand. Chapter 9 is tells us that investors want businesses with high growth potential and a clear plan for how we want to use the money. And a majority of the money is going to go into giving us the ability to put more into marketing, put more into our operating capacity and how many salespeople we can have in a store, because that's going to translate into more revenue, more sales globally. And I'm going to move forward here.
So,
Yeah, go ahead. All right.
so no, you're good. So for investors, the question is always, what do I get out of this deal? So our answer is that the growth we're projecting creates a strong return opportunity for you. In Chapter 9, it makes it clear that investors care about future earnings potential and the return on investment and the exit vehicle. So, our expected exit strategy is primarily acquisition. A larger bicycle or outdoor brand could acquire Elevate Bikes to gain our product line, market position, and brand momentum. A second exit path could be an IPO. If the company continues to scale at a strong rate, in our plan, we estimated that investors could reasonably expect a 2 times, 3 times return within 3 to 5 years, with room for upside if the company hits or exceeds projections. So the reason that estimate is realistic is because our revenue is projected to nearly triple from quarter three to quarter six. And our cash keeps growing. The business becomes much more profitable after the heavy quarter four investment period. So the return story is supported by our real projected numbers, not just a general optimism that we have for our company.
And for our summary of decisions, to finally close this up, Elevate Bikes has already shown strong growth, a clear market position, and a realistic path to scale. We entered a growing market, increased unit sales from 574 to 794, increased revenue from around 758,000 to over 1 million, and built a company with over $1.36 million in cash by the end of quarter three. Looking ahead, our strategy is clear. We want to focus on high-value segments, continue expanding, improve efficiency, and turn growth investments into long-term profitability. We believe our combination of strong market opportunity, clear differentiation, and disciplined tactical planning makes Elevate Bikes a strong investment opportunity.
We really look forward to doing business with you. Thank you for your time.
Thank you so much.
Yeah.
All
Thank
right.
you.